Hi guys, it's Vicki Cragen. I'm here with Jill Grimes at Umpqua Bank. She's a favorite lender of mine. We are going over things you don't know that you don't know until you know it. Does that make sense?
Makes sense to me.
Okay, Jill's going to talk about some of the things that she goes over with first-time home buyers, especially stuff that they don't know. Steps you can take to get a loan.
That's right. So when I'm talking to people for the first time about home ownership, you gotta live somewhere. So you're either gonna rent, lease, and if you're interested in purchasing a home, then I would love to talk to you about what that entails. The first thing that I do is that I talk about some 5 pieces of criteria. Income, job, you need a job so you can make the payment to the house. And then also you have to make sure that your credit is in line with the requirements for a home loan. The other thing you want to make sure is tax returns. So we do need tax returns. We're looking for 2 years. And bank statements. So you want to make sure that you have an account that you've been using, that you have income going into, and just a little bit of history that we'll take a look at. So we're really looking at income. We're also looking at debt to income. So we're looking at those things, for a home too. Mm-hmm. So those are the first things that we talk about, just a little bit of that. For first-time home buyers, it's a little scary, I know, but it's really basic. Your information is going to tell us where the best loan is for you, and then we can help guide you in understanding which program is going to be best.
So Jill, you have different programs available for first-time home buyers. Mm-hmm. You have USDA. A lot of Clark and Cowlitz County fall into the USDA area, which is a
United States Department of Agriculture loan. It's a loan from that department, but it was started to get rural areas populated.
Okay.
That's why it was started.
Is that a zero down program, or?
Yes.
That is a zero down program. Mm-hmm. So if it falls in there, that's something really handy for first time home buyers that don't have a lot of money when they're first starting out to buy a home.
That's right. We have USDA loan. We also have a bond loan here in Washington State. We have the Washington bond that we offer, and
that's kind of Washington's best kept secret, by the way. It is once more a zero down program, right?
That's right. And we also have grant programs where there is funds available, and we can talk about that in detail further once we get to that point. But we do have grants that are available for people that don't have maybe quite enough for down payment or closing costs.
See, that's awesome, because a lot of people don't realize that even though you have a zero down program, you still have to deal with closing costs.
That's right.
And closing costs can be pretty expensive, especially if you're not thinking about them when you start out. So it's very important to talk to your lender, and the credit, all that will also give buyers a basis of what they want their payments to be, because what you don't want your payment to be is more than you can afford, which means you're only going to look at houses that fall within that criteria.
Yes, and that's why it's very important to get pre-qualified for a loan before you start looking for a home. You want to make sure that the payments are going to be comfortable for you, and we have to make sure that you're not going to get yourself in over your head.
Yeah, and a lot of people don't realize, they think they can afford something, and they start looking at homes in the $350,000 range, and come to find out you can only qualify for $300,000. So you're setting your expectations too high for what you want to pay or what you can buy. And so it's super important to get that information beforehand, because when we submit offers for you, we need to have that pre-approval or pre-qualification from your lender to even submit. Since the recession, most sellers demand that because they want to know that this person's making a serious offer and they've already gone to the trouble to apply for a loan.
So, and I see a lot of times too where clients will be looking at something online, because a lot of times online house shopping is a couple of websites. Unfortunately, the websites are just showing what the principal and interest payment is on the house, and
Yes.
it doesn't include the homeowner's insurance, property taxes, and if, depending on the type of loan, it may require mortgage insurance. So
Yep.
sometimes those payments that people see are not correct, and that's what they get their hopes and, set on. It's like,
Yeah.
oh, I can afford this. And like you said, it's important to know
Yeah.
what actually your income and your debt will qualify you for. Everybody's numbers will tell a different story. Every
Yes.
single person.
Yes, and when you look at, I'll say Zillow for instance, they have this, what your calculated mortgage would be. Well, this is a nationwide system, and what might be in Arkansas is not going to be what it is in Washington. We all know prices in Washington have been growing steadily. We're one of the hottest markets. So getting all your ducks in a row before you even start looking is, I'd say, one of the most important things to do when you're looking to buy a home. Find a lender you like. Jill here, she's wonderful. She's very knowledgeable. Don't spend thousands of dollars on a, what do they call them?
Credit repair
A
company.
credit repair company. You don't need
Right.
that. You have a loan officer that is going to give you all the information you need to repair your credit, to get your credit score to a level that you're able to get a home.
Right, that's part of what we like to do.
That's
Get
their
people-
job.
Yeah, we want people on a path to home ownership,
Yes.
whether it's 2 days, 2 weeks, 2 months, 2 years. I've helped people over a long period of time.
Yep.
This is a relationship that we try to build and help people. So we're wanting you to get to your goal, not to our goal.
Yeah. And it's super important to, like I said, have a relationship with a lender that you know, trust, like. Different lenders have different niches. I think that's how you pronounce that. Of what they
Niches,
do,
yes.
niches, something like
Right.
that. Of what they do to, some specialize in construction.
Construction, VA, FHA, conventional, USDA. There are just so many different loan products that you need somebody to help guide you through that to see what your best
Yes.
option is and describe the different options and let you be the person that decides
Yes.
what's best.
Because it's all about information. The more information you have as a home buyer, the more comfortable you feel through this whole process, because it is kind of scary. It's a little intimidating if you've never done it. What are these terms everyone's throwing around?
Right.
What's mortgage insurance? Is that not homeowner insurance?
Right.
So it's good to have this knowledge going in ahead of time, so that you feel more knowledgeable in the whole process. It gives you some control over what's going on with your home purchase. It's I'm losing my train of thought, can't think for a minute. Jill, take it away. What exactly do you need for a qualification?
Okay, so when somebody comes in and I'm taking an application, I need your name, address, date of birth, social security number, a copy of your driver's license. I don't need the driver's license for the application, but just to take the application, I just need those questions answered, really.
And that's easy. Anybody
Yes.
can do that. So what is your recommended credit score? We all hear about credit score.
Right.
What is the lowest you can go with a credit score?
Well, like I said, to get a loan actually through, you're going to want at least a 620.
Oh, that's not bad. That's
No.
not bad. And you
No.
can go online. There's so many free websites out there that you can get a free credit report. A lot of times your credit card company will
The credit
supply
reports,
that.
though, they're going to be different than a mortgage credit
Oh, okay,
score.
okay.
So I wouldn't necessarily say that those are going to be the ones that are going to tell us, because it's a mid score that we take. And that a mid score is where we look at Experian, TransUnion, and Equifax, and we don't take your highest, we don't take the lowest, we take the middle score. It's not an average.
Fair
it's
enough.
the mid score.
Okay.
And they typically are different than what some of the other, free credit scores are. But Again, that's what we're here for, is to help you. If it's not quite where we need it to be, then I, can help you get there. I wouldn't wait to say, I'm gonna do it myself, I'm gonna do this, because you may be doing things that you don't necessarily have to be doing. And I've had people try to repair it themselves when they've actually not had to put $5,000 into something that they didn't have to. So before you do anything, I highly recommend talking to a loan officer first, and have them help guide you where you need help with. One other thing I wanted to mention, I know you're dying to say something, but before I forget, one other important thing to remember is, on a home loan, you do not have to put 20% down. We were just talking about the zero down and things like that. But you can get into a home from 0, 3%, 3.5%, whatever it is, and on up for that. So just keep that in mind, because a lot of times people get information from the past, and they've always said it has to be 20% down, and that's not the case.
And that's where those programs like the Washington Bond or the USDA come in and play a really big part in the grants, because that's helping people to get into a home with zero or little down.
Right.
But one of those costs, even though it's a zero down home, Jill, correct me if I'm wrong, closing costs. Nobody thinks about those.
Right.
That's something that's different than zero down. I mean,
Right.
you got to pay money at the end that you
There
might
is
not be
money.
expecting.
Correct.
And that's something that, as a realtor, when you're writing offers, a lot of times to alleviate the pain of having to pay $6,000 in closing costs, is you write your offer for $6,000 more and ask the seller to pay for it. That way, it's not money out of your pocket, but you are paying
eventually
it.
it
It is
is,
eventually, but it's over 30
Upfront,
years.
you're able to
Yes.
get into the home.
That way, you don't have to come up with that money at the end, and the seller still gets that price that they want. The only hard part is if it's close to what it won't appraise for, so it has to appraise for that much more, but that's something that you renegotiate at the end if it doesn't appraise for that.
Right. Right.
So, one thing I wanted to touch on with you, that's what I was
Yes.
trying to say, is I can't remember it now. Crap. Oh, sorry.
What's it about? Down payments, credit.
Credit. I'm having a brain freeze. Jill, talk to
I'm-
something. Say something. I'm trying to
Okay.
think.
Yeah.
Cut me off next time.
I'm sorry. I know. I'm sorry. So I had a thought too, and that's what I wanted to talk about, was that down payment, just because it gets really confused sometimes. One of the things that I'm working on a little bit more too is construction loans. So sometimes there's a lot of questions about construction loans, and people who have property and want to build on that, or they have property and they want a manufactured home on that property. That's something else that we do here too.
And that's something that a lot of people don't know, that you can have tax lots. You can have 10 tax lots on your property, but it doesn't mean that they're legal buildable lots. There is a difference, and that's part of what your realtor needs to help you with. And also, you need to do your own due diligence. Call the county. Make sure that it is a legal buildable lot. There's several really high-priced pieces of dirt that you can't do anything on because it's not a legal buildable lot. It's a legal lot, but not buildable for whatever reason. That's something you really need to speak to somebody that does a lot of or specializes in rural property or acreage property. My company, Legion's Realty, we do a lot of rural properties on acreage, and so that's something that's a totally different ball of wax than going into a neighborhood and buying something that's in a neighborhood. And it's a huge thing to know that information going in, eyes wide open.
Right.
It's the loans are a little different, because when you put manufactureds on a home, or on land, you need to make sure that you can. There are CC&Rs set up, and some lots you can't. The CC&Rs will determine how big of a square footage of a house you need to build. most standard CCNRs, it's 1,400 to 1,800 square feet minimum. So no tiny home villages.
And does everybody know what CCNRs are?
Codes and covenants. And there's tons of property out there that don't have them, but most of them do. When somebody buys a big chunk of land and breaks it up into pieces, those codes and covenants really determine what you're able to do there.
Yep.
Most of them you can't do, like hardcore hog farming or chicken farms. You can't live on the property in a fifth wheel for 2 years while you're
Time
thinking about
sensitive.
building.
Building
Or
is
you
time
can
sensitive.
or can't use manufactured homes.
Right.
Most construction loans, you have to start within a certain period, correct? What's that term from getting the loan? How long do you have when you get a construction loan to actually start construction?
Depending on the loan, it's not really about the starting of the construction, because depending on how long the permits take,
Yeah.
it's really the finishing of the
Yeah.
project. And depending on the loan, you'd like to see it done
And
within a year.
Speaking of permits, how long is the average for getting permits? Say I have a
I
raw
don't-
piece of land.
That's not me.
Not you?
No,
Okay,
that's
we'll
someone
go
else.
into that
That's
on a
another-
different video, because there's so much more to building a home on raw
Yes.
land than there is
yeah, that's
buying
a
something
whole
that
nother segment.
has its own. So
Yes.
one of our videos is going to be with the county and talking about that, because it's a whole different ball
Yeah.
of wax.
Yeah. One thing I wanted to go back to a little bit is getting people prepped for the loan.
Mhm.
I know that was one of the things that you'd asked me to talk about,
Mm-hmm.
and something that had come to mind is there's a generation that has a huge school loan
Yes.
debt, and a lot of times that debt is very high, depending on what the requirements are at the time, depending on who's holding the note to the loan. If you don't have a payment on a school loan, typically we have to calculate 1% of what the entire balance is as the payment. So if you have $100,000 school loan, 1% is going to be $1,000.
Wow,
That's a very high debt.
that's very high.
Yes, unless you are making, $10,000 a month, and 1,000 is not going to hurt you at all.
Wouldn't that be nice?
That would be very nice. Yes. But my recommendation for the school loans is to go ahead and have that payment set into place, not to defer it because of income base.
That's what I was going to talk about.
What?
Whatever you do, whoever you use, just because you qualify for a home loan does not mean it's guaranteed. If you, up to the last few days, right before we close on a house, the bank runs another credit report, a credit check. And if you decided in all of your unknowing wisdom, I qualify, I'm gonna go get a new car. Yes. No, don't do it.
No.
Can't tell you how many deals get killed. Your house deal falls through because you got credit, you can buy something, you can buy a house, you can buy anything, and you go out and get it before the papers are signed. Wait until after you sign, then do it. Don't do it beforehand. You will kill your credit and kill your house buying dream for at least a couple of years.
At least a couple of years. And even before that, I have a lot of clients that will buy a car and think, oh, now that I bought a car, I want a house to go with that.
Yep.
Well, if your car payment is $400, I mean, let's just say debt to income, you don't want to be any more than 50% debt to income. So debt to income is if your debt is $2,000 and your income is $4,000, that would be 50% debt to income. So if, let's just say your income is $10,000, or your income is $10,000. If your debt is $4,000, that leaves you $6,000, right? So that would be a 40% debt to income. When you're looking at buying a home, the debt to income cannot be more than 50%. So let's just say that you're making $5,000 in income a month. all your debt plus the house payment can't be more than $2,500.
Wow.
So that means like if that student loan payment was $1,000, and then credit card debt or a car debt, and the house less than $1,500, that would be very difficult.
Yeah, and a lot of people don't realize this. Clark County, like I said, is one of the fastest moving real estate markets in the Northwest. We have so many people moving from Portland and from California. It's just making our market go crazy. It's slowed down a lot since 2016, but it's still, your first time home buyer is looking at a loan of at least $250 to $300.
At least.
Which I don't know, Jill, what would your payments on average be on a $300,000
There's really not
house?
an
There's
average,
not an average?
because
Okay.
depending on, people will put down many different amounts.
Okay.
So,
So if you put zero down and you're buying a $300,000 house, does it matter what program you are, how much your payments are going to average?
yes, because the interest rate will be different
Okay.
in each particular
Okay.
one. Mhm.
So, but from a realtor's point of view, you're looking at between $250 and $300, and I don't know if you've been going on Zillow and Realtor.com, but finding a property, a house for $250,000 is hard. There's not a ton of them, and you have to be able to say, can I see myself living here? And make that decision, because chances are if it's $250,000, it's going to be gone in a week.
Yes, it's the price point
not
everybody wants.
Yes. Not like 2015 and 16 where it's gone in hours, or at least the first day. You at least have a week. But there's so many things in our contracts to let you back out if you have to. You're well advised to go ahead and put that offer in if you think that you could actually live there. Because even under $300,000, there's not tons. And when you're looking at a $300,000 house, you're looking at 3 bedrooms, maybe 1 bath, 1.5 bath, no master suite. I mean, it's pretty bare bones. What, 8 years ago you could pick up for $100,000. Now it's $300,000. So,
Right.
That's really going to make a difference on what type of loan you're going to get. Is it something that even qualifies for FHA or VA or USDA? Those are pretty picky programs because they are government backed. They don't want holes in the wall. They don't want fixer-uppers. You can get a rehab loan.
I would say the only loan that's going to help you get that would be maybe one type. You could do a 203K.
What's a
that could help.
203K? That's
Right, a 203K loan is a loan that it allows you to do some minor repairs to the home before you've moved into the home. And there's a lot of specifics on that. But
Yeah.
again, that's another loan that we could help you with. Each loan has its own,
Yeah.
I know you say picky, but it's really conditions. Every
Which is
loan
picky,
has
which is picky. Okay, conditions are picky in my world.
They are picky, but this is the biggest purchase of your
True.
life, and we're giving you hundreds of thousands of dollars,
True.
and you need to have your
You're
things
poop in a
in.
group.
Yeah, you need to have your. It's
Politically
detailed.
incorrect
It
as it
needs to
is.
be detailed if we're giving the biggest loan of your entire life.
Yes.
So we are detail
Nobody
oriented.
no bank wants to
Yeah.
have a foreclosure on their hands. They're
And people don't want a
and
foreclosure.
you don't want your house to be foreclosed
No,
on. It's
no.
not like just giving a car back that
No.
you decide you can't make payments on. It's a
Right.
lot more involved than that.
The repercussions are a little bit.
Just a little.
bigger.
A little bit.
Yeah.
Anyway, this has been Vicki Cragen with Legion's Realty and Jill Grimes with Umpqua Bank Home Lending. And it was great talking to you guys. I hope that this gave you some information that you might not have known and some programs that would really benefit you. If you talk to your lender, ask them about it, talk to Jill about it. She's more than happy to help and walk you through the process. You guys have a great day. Thank you so much for watching. Bye.